Hey passive income investors, welcome back to the APY Guy channel where we break down the latest in ETFs, dividends, and passive income in crypto. Today we're diving into the YieldMax Ultra Option Income Strategy ETF. Isn't that a mouthful? Ticker ULTY, and some exciting recent changes that might help tackle one of the biggest challenges, NAV erosion. Is ULTY turning these things around? Let's find out. If you're new here, hit that subscribe button and let's get started. For those unfamiliar, ULTY is an actively managed ETF from YieldMax, launched in February of 2024, designed to generate high monthly income through a covered call strategy on 15 to 30 high volatility US stocks or ETFs. It's known for its eye-popping yields, sometimes exceeding 80% annually, paid out weekly, which is a big draw for income-focused investors. Like many YieldMax ETFs, ULTY has faced criticism for NAV erosion. That's when the fund's net asset value, or NAV, declines over time due to distributions that include return of capital or losses from its option strategy. This can erode your investment's value even with those juicy yields. So what's changed recently to address this? Let's break it down. I put together a summary here to what ULTY has done to tweak its strategy to stabilize the NAV erosion. Okay, the first thing they did is they refined their option strategy. YieldMax has reportedly adjusted ULTY's covered call approach to better balance income generation with capital preservation. Instead of overly aggressive call writing, the fund is now focusing on optimizing strike prices and expiration dates to reduce losses when underlying securities drop. This could mean less exposure to sharp NAV declines during market downturns. Also, the stock and ETF holdings, unlike most YieldMax ETFs that don't own underlying stocks, ULTY holds some actual stocks and ETFs alongside its options contracts. Some people are saying that YieldMax has been more selective, targeting securities with high implied volatility but stable price trends, which could help stabilize NAV erosion. And then management, YieldMax's sub-advisor, ZEGA, ZEGA Financial, is emphasizing tax loss harvesting and synthetic call strategies to offset losses. This approach aims to minimize the impact of market volatility on the fund's NAV erosion. As noted in recent SEC filings, that's where I got that information from. And they're doing the weekly payout, which has been more consistent. We'll look at that in a second. ULTY has shifted to weekly distributions, which has helped smooth out cash flow and reduce the size of individual distributions, which it's been steady and they've been good. And the APR has been steady as well. Okay, let's take a look at the distributions. Yesterday was the last one. It was 8.7 cents. Then before that, 9.5. So it was 10 days between the two distributions there. Before that, it was every 7 days, pretty much like clockwork. They're pretty close in amounts: 9.5, 9.4, 9.5, 9.7, 10.5. This one was a little more, 11.8 on the one on May 9th. Okay, and now the most important part, let's look at the price action. I took a look at the chart and I actually made a line where every distribution paid out was paid. So here I was trying to see if there was a sell-off going after the distribution. There kind of was. It looks like almost every single time. Looks like people are selling after the distribution, and then it kind of gains momentum going up to the next distribution and then back down, and then more momentum throughout the week. So it seems like, I guess you could time it right after it, if it pays out right after the distribution, you could sell and then kind of buy back down here. But the price action is surprisingly steady. That's the 1 hour chart. If we look at the 4 hour, it's been kind of in this range between $6.40 and $6, and it's kind of stayed there. That's all the way back to, let's see, May, the beginning of May, and it's held pretty steady even with all the big news with the Israel-Iranian war. It's held in that range the entire time. So it is fairly steady, and there are opportunities to trade this possibly. I'm not going to do it. I don't really have enough time to kind of time the market like that, but it's something that somebody that was able to watch the charts frequently, could probably profit from, because the range is very defined. It's defined between about $6 and $6.30 to $6.40. So should you add ULTY to your portfolio? I think it's best for income-focused investors like retirees or those with larger portfolios who can afford some NAV erosion and want consistent cash flow. The recent changes have made it more appealing by slowing down the NAV decline, but it's not a growth vehicle. If you're younger or saving for long-term goals like a house down payment, you might be better off with QQQ or VOO. Those are more stable ETFs. That's the deal on ULTY's recent changes and how they're tackling NAV erosion. What do you think? Is ULTY's high yield worth the risk, or are you sticking with safer options? Drop your thoughts in the comments below, and let's keep the conversation going. If you found this video helpful, please like the video and subscribe for more ETF breakdowns in the future. Thank you for watching, and as always, have a great day.